In this lesson, we'll work through the IEB November 2023 Paper 1, Question 1B on tangible assets or fixed assets. I know this is often seen as quite a complicated section, but I quite like it. The trick really with tangible assets is just to use some T accounts. The T accounts will make it much easier for you to see exactly what's going on. In this question, you can see you're given some balances and a few transactions. Before we start looking at the information, let's go see what we need to do. We've been asked to calculate the following amounts in the spaces provided. Please note that the final amount must be transferred correctly to the note. We need to calculate the carrying value of the disposed of asset. Whenever you're working out anything to do with a disposal, very often it's easy to work out using an asset disposal account. So I would automatically just put a little T account in for disposal. And then as we get the information about what was sold or disposed of, we'll pop it in there. We then need to calculate the accumulated depreciation on the 1st of March 2022. Note that that is the beginning of the year. If you have a look at your dates, you can actually see above in the information, we are currently at the 28th of February 2023. So that means we need to work backwards to get the beginning amount. Usually, again, the easiest is to do a T account. So I'm going to do an accumulated depreciation account. And then we need to work out the cost price at the end of the year. And again, I'm going to create a vehicles account for that. Since these are rough T accounts, you don't need to worry about writing everything out in full. Abbreviations are absolutely fine, only in the calculations. Obviously, the rest of the paper, abbreviations don't get marks. You don't have to do T accounts here. You can calculate it in any way that you like, but you'll see I like the T accounts because it makes it much easier to do the note, which you can see is coming up. So the next thing that we need to do is we need to do the tangible assets note. You can see some information has already been filled in for us. So we can actually take this and go and pop it in our T accounts already. We can see that the cost price at the beginning was 1.8 million. So we can use that in the vehicles account at the beginning. Why did I put it on the debit side? Well, obviously vehicles is an asset account. And remember, assets will increase on the debit side and decrease on the credit side. If you can't remember, look at your accounting equation. And remember that the accounting equation is set up as the basis of your debits and credits. And if you just put a T on top of it, you can see that whenever the assets are increasing, you debit them. And when equity and liabilities increase, you credit them. We can see also that we've got the depreciation figure over here, 287,250. That is the depreciation for the year. So we can show that in the accumulated depreciation account. I've put it in the middle because obviously I need to have space for my balances before that. The reason that I've put it on the credit side is because accumulated depreciation is an asset account, but it's a negative asset. It works together with the asset vehicles. So yes, assets go plus minus, but because it's a negative asset, we'll usually work on the credit side in accumulated depreciation. And the last thing that you can see over here is the 106,350. That is the end result for accumulated depreciation. So I'll pop that in at the end of my T account. Okay. Right, now that we've set out our basic answers, we can go and look at the actual information. And you can see over here that, in fact, they have given us the beginning balances for vehicles and accumulated depreciation that I've actually already used. If I hadn't picked up that I needed them from the note, I could pick it up over here. The following transactions we need to use. A new vehicle was purchased during the year for 360,000. If we bought a new vehicle for 360,000, that is obviously going to impact on my cost account. So if we look at the vehicles account, we can see on the debit side, we would want to put in the 360,000. That's for the new vehicle. Now, they didn't give us the date that it was purchased. Where you're doing questions that require you to actually go and calculate the depreciation, then I would put in how many months I had had that vehicle for. But I don't need to do that in this case because they haven't told me. We're then told that an old vehicle which cost 250,000 was sold during the year. Now, if it cost 250,000 and it was sold, immediately I can show that on the credit side of my vehicles account because it's going out. It was sold during the year for 120,000. So that 120,000 is my selling price. So now, in addition to the cost of 250 that I can put in my disposal account, and notice that if I credited vehicles, I'd want to debit the disposal account with that 250. I can also put that selling price of 120,000 in. What would have happened is you would have had bank or debtors or creditors or whatever it would have been. We don't know how it was sold, but if it was bank, for example, we would have had a debit of 120,000 because bank is an asset that's getting bigger, which means that I would have credited disposal with that 120,000. We're then told that the business made a profit of 38750. So that means that in the disposal account, I'm going to show the profit, which normally we work out as a missing figure, but in this case, there's going to be something else. If you're not sure what side it goes on, show your profit account. Your profit account is an equity account. Equity goes minus plus, which means that you would have put the disposal on the credit side of the 38750, which means that you would show it on the debit side of disposal, 38750. The next piece of information that I've got is that vehicles are depreciated at 15% per annum using the cost price method. So that I would normally go and make a little note of that either on the vehicles account or the ACC debt. Personally, I like to put it on the vehicles. I just make a little note over here that it's 15% on cost price, so that if I need to calculate any depreciation, I can. And it tells me that the depreciation on all the vehicles sold remaining and new has been correctly calculated as the 287,250, which we've already picked up in the note. And we've already shown that in accumulated depreciation. In disposal, you can then work out the missing figure as your accumulated depreciation. The way that you work out a missing figure in any T account is whatever the quadrant is that you're looking for something, everything else is a minus. And then as soon as you cross the line to the other side, everything is a plus. If there was something down here, we're at minus and we're at plus over there, but we don't have anything there, so we don't need to worry about that. When you work it out, you'll see that the accumulated depreciation comes out as 168,750. So, but once we've got that, it's very easy to see that you can work out the carrying value of the disposed asset because you simply need to take a combination of your cost price plus or minus, I should say, your accumulated depreciation. And that will then give you your carrying value of 81250. Now, in case you hadn't already seen it, there is a faster way to actually answer this particular question. However, I do need my accumulated depreciation for the next question, which is why I have done the T account over here. But if you pick up on it, you can actually just take your selling price, which was given to you as 120,000, and you take the 120,000 selling price and you combine that with the profit that you were told about, because they told you there was a profit of 38750. So if that's the profit, that means that you can then work out the carrying value as 81250. So that's a nice shortcut. It's actually an easier way of doing it if you didn't need the accumulated depreciation later. Once you've got that accumulated depreciation, you can obviously use that in your ACDEP account over here to show that that was what was sold. And then from there, you can work backwards to get the missing balance at the beginning. And again, if we're working out a missing number in a T account, you subtract everything in the same quadrant, plus when you cross the line, and then you can work it all out as 945,000 in the beginning. Your cost price at the end of the year is very straightforward, because you just need to work down and you say your 1,800,000 plus your 360,000 minus the 250,000 will give you your vehicles at the end as 1,910,000. Now that you've completed all the information and your T accounts, you'll see that you can actually very easily use these T accounts to set up your tangible assets note. Even if they don't ask for the T accounts, or in this case, they just asked for calculations and you cleverly figured out to use your T accounts, go and put T accounts somewhere on your page in any blank space that you've got, because it will make doing the T account that much easier. So in the T account, you can see we've got the cost prices already entered, the accumulated depreciation. We've now worked out the end balance, the beginning balance at the beginning of the year. So that 945,000 is going to be the ACDEP that you'll use over here at the top, because that is obviously the beginning of the year figure. Please make sure that you do put brackets in, because if you don't have the brackets, you will lose the marks. Your additions, you can pick that up immediately from your vehicles account, because in the vehicles, you've got the new item shown there on the debit side of 360,000. Your disposals, you can see your carrying value we worked out over here, and you can pull it from your disposal account 81250. Or what you can do is, if you've only got your T accounts, you could show your vehicles amount over here. You can see the sold 250 minus the sold 168,750 in ACDEP. That combination would obviously give you the 81250 that you actually worked out at the beginning. Again, that needs to be in brackets because it's being subtracted. The cost price at the end, you can simply use the balance that you worked out in your vehicles account. And then all you need to do is work out the carrying values at the beginning and the end. At the beginning, your 1,800,000 minus 945,000 will give you 855,000. And at the end, your cost price of 1,910,000 minus your 106,350 that was given should give you 846,500. Also, you can work that out by working down and taking your beginning carrying value, add and subtract your movements, and that should give you the carrying value at the end just to check for yourself. And you're done.